Welcome back to The Exchange. Sources telling our David Faber that Paramount Skydance could be making a bid for Warner Brothers Discovery as soon as next week. WBD up 50% week to date on that news. Our next guest says the merger makes sense for strategic and economic reasons, but she maintains her hold rating on both stocks. Well, let's bring in Needham's Laura Martin. Laura, it's great to have you here. I mean, the way the market has responded to these reports is not just to carry Warner Brothers stock higher, but also Paramount Skydance, and implying the market saying there is value to be created through such a transaction. How much value do you think, and what does it tell you about what WBD might actually fetch in a deal?
Right. So we calculate there's about $30 billion of total synergies by putting these two companies together, because there's a lot of cost overlap in both cable networks and studios. So you could lay off a lot of people. Secondly, I think the reason P-Sky is going up is because if they make a bid for Warner Brothers, which is like 3 times bigger than P-Sky is today, it is clear that the co-founder of Oracle, Dad Larry Ellison, is behind the full aspirations of the son, David Ellison. So that means the credit quality for the debt just got better, and as did the equity upside risk reward get better, because you've got basically the world's richest man standing behind these assets.
So if you do the math, the $30 billion, let's say, in value that could accrue, what does it mean for where Warner goes, right? In terms of, because obviously there's a bunch of debt and the stock has already moved a fair degree.
Right. So we show that Warner Brothers, somebody could bid $24 a share for Warner Brothers if they were willing to transfer all $30 billion of the value created by putting the companies together to the Warner Brothers shareholders, which would be sort of a lousy deal for P-Sky shareholders. But the point is, up to $24 a share, we think is justifiable under the synergies of putting the two companies together.
If the two companies are put together, Laura, how does it rank in the media landscape then, in your view?
Oh my gosh, it'd be fantastic. I mean, so it would be the 5th largest advertiser with about $18 billion of annual advertising revenue, so sitting behind Google and Meta, but really one of the largest ad-driven companies. It would be one of the largest studios, so Netflix, Disney, and then this combined studio would be number 3. It'd be bigger than Universal, actually. And then that's from the studio side. In cable networks, it would be like 50% of total cable channels, which admittedly is a dying business, but it would be by far the largest player and owner of cable networks when you put it together. So really dominant strategic positions in 3 different businesses. Also streaming, be much more scaled up. So you get it buying a lot of scale all at once. So strategically much better position put together.
I mean, it might be laughable to ask the question as to whether that such a deal, given all you laid out there, would get through on a regulatory side. I mean, you could think back a couple of years, and the government, and under a different administration, blocked the merger of 2 book publishers because they said they would have too much power over authors. So here we are taking the big 5 traditional studios to 4 potentially, and, you know, imagine the power that they would have over creators, but I guess it doesn't matter.
So 2 things. One is, I think a core focus of the administration is going to be the fact that CNN would move from liberal hands into the Ellison family hands, which are conservative. I think that would be a regulatory positive. And then from a bigger picture, that's the tail, but it might wag the dog. And then the bigger point of view is, of course, these companies will argue that Apple has a studio, Amazon has a studio, Netflix is building a studio, that the 5 Hollywood studios aren't actually a thing anymore, that we have really legitimate big competitors with deep pockets, and therefore these companies must consolidate or they're just both going to go out of business separately.
And Laura, how do you impute this on the rest of the media space in terms of, you know, does Netflix get hurt? Does Versant look much better now? I mean, what are your thoughts?
So what I would say is that I think this is a survival requirement, actually, for both of these companies, more than so either they're going to go out of business, which loses the industry to competitors, or they get together and they can compete longer with more resources behind them, especially if the world's richest man is standing behind them with a checkbook. So it allows them to stay longer in the business. I guess I think it just makes the industries they're in healthier and makes them more competitive. But I can't tell you it automatically hurts Versant versus, I don't really think it does, or another survivor.